Am I on? Oh, hi, everybody. Hi. Why do you do that to me?
Said you were on.
Oh, my gosh. Hi, my name is Glenn Tompkins. Welcome to the Hot Stock panel for the month of March, which is hot stocks for rising interest rates. We all know that rising interest rates are coming. We all know that inflation is an issue. And both of my esteemed colleagues today will talk a little deeper than I probably am on inflation and on rising interest rates. And one of them says he's only going to be on for 5 minutes, and he ain't gonna happen because he's very smart in this whole space. So I'm sure that he's going to expand and give you some great information on that. And the other one is just okay. So it's all right. My name is Glenn Tompkins, senior instructor here at VectorVest. Always love having you here at these hot stock panels. And yes, we do have a little bit of fun, but we're going to bring to the table some good stocks for you to keep in mind as interest rates increase. It's going to happen. There's no ifs, ands, or buts about it. I think all three of us are going to have some input on what we think from the interest rate perspective, but keep in mind, it's what we think. All right. We never try to outguess what the market's going to do, because every time we do, the market has a way of humbling you each and every time. And in a minute, as a matter of fact, Joey, bring up who our guests are. We have Steve Chappell and we have Jim Penna. Oh, there you go. Well, hello. Where did that come from? That came from the Honeymooners, isn't it? That's the Honeymooners. Hello. Address the ball. Hello, ball. Yes, that's right. And you can see that he's sitting at the 12th hole?
It's the 12th tee at Augusta.
The 12th tee at Augusta. And Steve's just sitting in his office, and me, I'm just got, what I got. But this hot stock panel is going to really we're going to bring it. We're going to bring it today in regards to what you need to look for as interest rates rise. All right. So if you can hear us, and I haven't done that, if you can hear us, respond in the affirmative, preferably with VV Nation, so that I know that we are coming across loud and clear. And not only that, let me know where you're tuning in from. I love that we have a reach around the world when we do everything that we do here on the channel. So again, thank you all for being here. And I guess let me do this as well. Where's that thing? Right here. Is that it? Yes. So we're not sponsored by anyone when we talk about what's going on in the market, like other YouTubers are, but something that I think that I need to push a little bit more. What we show here on our live streams is just the tip of the iceberg of what VectorVest has the capability of doing. What we do want to offer you from this social media space is your ability to take advantage of the VectorVest system that we use in every live stream. Take advantage of it. 99 cents for 30 days. Now, a lot of YouTube channels will say, well, you want to take advantage of what $500, $1,000 and get you in and blah, blah. 99 cents, folks. 99 cents for 30 days to utilize this powerful system of analysis. All right, so I want to put that out there so that you all know. You got to take me back to the other screen, Joey. And so here we go. This is our what we're going to do, the hot stocks for rising interest rates. I'm going to get us right into the VectorVest software. All right, that's not the way I wanted to go. Is that it? That's not it. All right. Gonna put me, there we go. Here's our 7 stocks. I'm going to have 2 stocks. My next guest is going to have 2 stocks. It'll be Jim, and then Steve will finish us all out today. He'll give you 3 stocks. So we'll have 7 stocks altogether. Notice that all of these stocks are sorted by our master indicator VST. So depending on who's got what picks, you can see where they all sit in the list. And I'm going to start off with my first stock in the list, which is MRO, which is in the space of petroleum. And gosh, you guys in oil. And man, from an interest rate perspective, and Steve says he's going to give a lot more understanding of what the real systemic problem is, or what the real problem is. I don't know if I want to use the word systemic, but what the real problem is. And but oil is on the rise. And even as interest rates go up, depending on what's going on with our oil situation, and I'm going to step out here a little bit, we were on the path for oil independence, and then that changed. But my opinion is we're going to still get to oil independence. I think it's going to take a little longer, going by way of clean energy as opposed to drilling. All right, so that's as far as I am going to go in regards to that. All right, you know me, and you know what I like about the channel, and what I try to make sure is that we do not put any politics into the channel. That's the reason why I stated it the way that I did. All right. Nonetheless, in the situation that we're in right now, even if interest rates rise, oil is still an issue. And it's gonna, in my opinion, gonna still go up in value, go up in price. And I still think that it's a good place to have your money. As you can see today, it's up $1.5%. But if you look at our indicators, which makes us different from everyone else out there, all right, what makes us different from anyone out there is the system of analysis that we have. So we look at an indicator like RV, cast on a scale between 0 and 2. Above 1, the stock's got a higher probability of outperforming the market over the next 1 to 3 years. The market we look at is called a AAA corporate bond. You buy a bond, it matures. After it matures, you get your money back with a small interest. So it's not a gangbuster trade, but it's altogether a more safer trade if you want to look at it from that perspective. MRO on that scale for relative value between 0 and 2 should outperform a AAA corporate bond by 55% over the next 1 to 3 years. Relative safety is an indicator of risk. Before you get into any stock, you want to know how risky the trade is going to be. On that scale between 0 and 2, above 1, less risky your trade. Not only that, relative safety looks at the stock's ability to exceed or meet the expectations of earnings. Above 1, the stock's got a higher probability of meeting or exceeding earnings, okay? The next indicator, RT. This is our technical indicator when analyzing stocks. RT above 1 tells me that the stock's in an uptrend. At 1.8, this stock is not only in an uptrend, it's screaming higher at 1.8. People will say, well, doesn't that tell you that the stock is overbought? Well, no. You can see a good stock have an RT close to 2, which is the maximum level you can be at for a long time if the sector or industry is running. So it doesn't tell me that it's overbought. It tells me that it's really moving high. It's really doing what you want it to do, which is go up in value. And then it's got an overall VST. Take all 3 of these together into a VST of 1.5. The stock, all of the stocks are ranked on that scaling between 1 and 2. It's a good quality stock in our database. It's a buy recommendation. CI is also a technical indicator. It tells me the stock's price growth persistence, that in essence, in layman's term, that the stock's price goes up more than it goes down. We also like earnings. Why? Because earnings is the engine that drives the stock's price higher. This company has positive earnings and earnings growth. They're growing their earnings at a clip of 34% a year. Now, keep in mind that our earnings per share is forecasted a year ahead. Why is that important? Well, I could look at what the actual earnings is right now. It'll give me a number. What does that really tell me? Not a lot. If we forecast it out, we can see if the earnings from right now are lower or higher than the earnings per share that we have forecasted, to give you an idea of if the earnings per share is rising and where it should be a year from now. All right. Next thing I want to see, does the stock pay a dividend? Yes, it does. 22 cents. Dividend yield of 0.95. Not huge. All right, not huge. It's got a dividend safety of 77 on a scale between 0 and 99. Above 50, the stock should be able to continually pay that same dividend or grow its dividend. Dividend growth is at 12%. YSG, which is our dividend analysis, like VST for the stock analysis, is above 1, so that's all good as well. So for those of you who are saying that, and I still don't have the chat yet, for those of you who are saying that oil is overextended at this time, it's moving up. It's doing exactly what you want it to do, and that's the most important thing when investing in a stock. So from my analysis, do I like it based on the analysis? The answer of your question is yes, I still like it. And I think all of us may have an oil stock that we're looking at as our picks. All right. The next stock that I have, I changed. I was going to do retail, but I changed from an interest rate perspective into a a utility stock, which is Pampa Energia, PAM. The stock's price is trading. Now, notice Marathon also, we give a value. It's trading under its value. That's also a tick mark. Our mantra is to have you in safe, undervalued stocks that are rising in price in a rising market. If you can hone in on those things overall, I think you're going to put yourself in a good position to not only make money, but to consistently make money. As I mentioned, my next stock is an electric utility stock trading at 23, value of 26. As I look at the upside potential at 1.26, the stock should outperform a AAA corporate bond by 26%. Now, the safety is not nearly as safe. This is the least safe stock on the list. So this is going to tell me that it's going to have a little bit more volatility in place with it. But as interest rates go up, people still need electric. They still need gas. So I still think that from that perspective, it's still, now as we get into the hot season, electric's going to go up. Why? Because people are going to be running their ACs. I still think that a utility, even as interest rates go up, are a good play. Buy recommendation. It's in an uptrend. The only thing that concerns me is that it's giving up a little bit more on the safety side of the fence. This makes it more of an aggressive stock. Where the rest of these stocks are more prudent, this is a little bit more of an aggressive play. Earnings is positive earnings growth at 19%, the least on the list as well. All right, and that's okay as long as the information is positive. No dividend. Again, this is the only stock in the list that doesn't pay a dividend. So it's not going to give you the passive income from dividends, but I still think that from the perspective of energy or just the perspective of utilities, I think utilities should still do well as interest rates rise. So those are my two stocks. Let's go look at them on a graph, view the stock graph. Let's pull those up. And I'm going to pull this up as a graph layout. I've got one for a longer term, more of a swing trade. And normally I look at a 3-month graph. Today I'm going to look at a 6-month graph or so. Man, oh man. Look at that. So what am I looking at on the graph? I'm looking at I'm looking at a moving average of volume. Where's my moving average in general earnings per share? I want to say it's a 20-day EMA price. There it is. It's a 20-day or 20-period exponential moving average. I like that from a longer-term play. As long as the stock's price is above the 20-day exponential moving average, it's a good time to be in it. The stock is going from the bottom left to the top right. Look at the earnings per share, higher than it was 6 months ago, a little tick up and leveling out. Volume looks strong. Volume is conviction. Volume looks strong. The stock's coming off of a new 6-month high from yesterday, a little bit lower than it was yesterday, but still green, a little bit of indecision with a doji. Looks like what is that called, Steve? Not a firefly, but what is that pattern? What's the word? Dragonfly. Firefly, dragonfly, airplane fly, a butterfly, something like that. But nonetheless, in an uptrend above the moving average, nicely above that level of support. I'm using support resistance, sitting at the value of what? $20.66, bouncing up. I like it. Volume is good. Was rising with the exception of today. Pulled back, but the volume is still strong. Volume's still strong as it's trading higher. So that's my first pick. Looking at oil, I still think that oil is a good play. And I'm going to invite my guests to come on and give me their feedback on the pick. Starting with Jim.
Yeah, I'm sorry, Glenn. Can you run through that again? No, I'm just kidding. No, listen, I agree with you. I have an oil stock as well, as you talked about earlier. The graph patterns are great and all, but I'm still looking at these from, that more macro view, where, we're here to talk about stocks in interest rates, right? In rising interest rates. But one of the reasons that the Fed is going to raise rates is because of inflation. And one of the things that's causing inflation is energy prices going up, right? So it all connects. I saw someone in the chat box mention something about, interest rate stocks. So it all really does connect. But I like the oil. I like this particular stock, and everything you showed is fall right through. I'm going to talk about another oil stock, although mine's more drilling. It's not refining and marketing, but I agree with you. on this, on the
And
sector moving forward. And I like the
that
idea.
was Dave said, when will you start talking about the topic hot stocks for rising interest rates? And thank you, Jim, for bringing that to the forefront, is that they are connected. They are connected. Steve?
Yeah, so they're very connected. I mean, this is the root cause of a lot of the inflation that's running rampant, certainly. And without any economic shift in policy, I don't expect any end to it, to be quite honest with you. So, the alleviation by reducing strategic oil reserves is fine, but that's not going to succumb the overwhelming problem. And until we gain, as Glenn mentioned earlier, energy independence, we really have almost no say in the matter. So, no, this is very much appropriate and has been for really the last 6 or 9 months. And I don't think that we're at the end of the energy boom.
Okay. So hopefully, Dave, that answers your question. And thank you, Steve. I like the way you answered that, because you could have went a whole different direction, and I appreciate you answered your question like right on point. I thank you for that. All right. Let's go look at the graph of my second stock. And again, I like utility because no matter what, whether interest rates are high, whether interest rates are low, I think that utilities are always a safe bet to play because people need utilities. Bottom left, top right, a little bit more volatility in the move of this. Remember, the relative safety was below 1 as you look back at the graph. So it is a little bit more of an aggressive stock, but that relative safety takes into account it is a little bit more volatile in its move, but recently went through 2 levels of resistance, a level of resistance of 2105, level of resistance of 2146. Nice big open candle yesterday with nice volume. So there was conviction to the move. It is above the 20-day exponential moving average and hitting a new high today, even though it's pulling back a little bit. Earnings per share looks solid. Earnings per share looks solid. And it is what it is. And I think that not as strong or solid or smooth of a graph as Marathon Oil, but definitely moving from the bottom left to the top right. Why do we look at graphs? Because graphs are worth 1,000 words. Graph is a picture, and it gives you the story, and it gives you the story that's needed to be given whether you like it or not. The graph is not designed to succumb to what you think. It's designed to give you an accurate accounting of what's going on, whether it's looking at volume or moving averages or support and resistance or earnings per share. It's giving you a solid picture of what's going on. Will Russia-Ukraine conflict slow increasing interest rates? Ooh. So that's I'm going to give you my opinion on that. If you've watched Midday Market today, my live stream at 12 o'clock today, I did talk about that. The Fed is on target to still do what they said they were going to do. My 2 cents in regards to that is in regards to the news story. The news story says they do have the possibility, it's on the table, that they could take more aggressive action to accommodate or go after inflation. In a good conversation that I had with Steve not too long ago, he brought and set in my mind, was the Fed too late to the party? Or is the Fed fighting now the battle on 2 fronts, trying to stave off inflation and raise interest rates at the same time? What happens if inflation starts to fade a little bit and you're still raising interest rates? Now what? So I still think that the Fed is on target, on plan. I think that what's going on with Russia and Ukraine could make them get a little bit more aggressive. How aggressive? Don't know. All right, but also keep in mind that even if they raise 4, 5, 10, 11, 15 times this year at a quarter point or so, or even a half a point, keep in mind where interest rates are still going to be. They're still going to be historically low, and I think a lot of people lose track of that. All right, so that's my utility stock and answering the question on here as well. All right, Jim, your feedback on the stock.
Yeah, Glenn, and there's just one thing that struck me as you're going through this. Is this the one stock that doesn't pay a dividend?
Yes.
Okay. So and listen, it's a great stock. If I'm buying from putting my retirement minded hat on here, if I'm buying a utility stock, it's usually because I'm looking for a dividend payout.
Okay.
I'm really not buying it for growth here, but you know,
And that's why I want your input, and I'm okay with that.
Yeah. So again, it would depend on your objective. If you believe that this recent move to the upside that you're looking at with that nice big green bar, the thing about graphs is, I steal a quote. I'm not sure who to attribute it to, but it's a great quote that I heard. Is, it's not what you're looking at; it's what you see, right? So, it depends how you interpret what you're seeing here. And if it's a utility company that's not paying a dividend, I'm not, probably could find some nicer utility companies.
Okay, that's fine. Steve?
Which direction to go? I've got 3 or 4 different directions I could go here, but I think with this one, if I remain interested, based on Glenn's premise, I do believe you'll be able to get a better offering price here, probably a retest of support. It looks like the stock's getting a bit tired already off of what appeared to be a couple of explosive days there. I kind of echo what Jim was saying, though, actually. If I'm going to go utility, I would want to be seeking a dividend. Typically, I think there's a lot of directions to go for price appreciation better than the utility space, but I'll just leave it at that.
And that's fine. I'm okay with that. So both of y'all could have said your pick sucked. You could have both said that, but I mean,
I think we did.
All righty then.
I'm just
Joey
kidding.
says that was a very nice way of them telling me that
I'm joking with you.
my pick sucked. I'm
just
okay
joking.
with that. We'll see. That's all
Just
we can
joking
say.
with you.
All right, I know. I love you both. All right. So those are my 2 picks. And where they sit in the list, and I gave you my reasons why I liked it, and we'll go from there. And I'm going to take Steve and Jim to the back afterwards, since they said my pick sucks. So we'll go from there. All right. So the next person that's going to come up is Jim Penna. He's going to tell you a little bit about himself and what he does. Take it away, Jim.
How you doing? Do I just click request control to get this?
He just gave it to you.
Okay, cool. Okay, hello everyone. Thanks for taking the time to be with us today. My name is Jim Penna. I'm the manager of retirement services here at VectorVest. Been here for about 15 years now, and it's been it's wonderful to be here with you guys today and with my friends and colleagues, Steve and Glenn. What I want to talk about a little bit today are, well, I guess where that screen is up there. What I'm going to talk about first, before I get into my stock picks, just for 30 seconds here, is I want to invite you guys to a live webinar I'll be conducting next week for the Options Jumpstarter, Beginner's Guide to Profitable Options Trading. So if there's anybody in the room who is new to options, it is designed to help build a foundation. The flexibility and versatility of options are endless. If you're not currently understanding options, whether you want to trade them to make market and money in an up or down market, or as we do in our retirement coaching group, use them mostly either to sell calls to generate income, or more importantly, is certainly in the markets that we're seeing, is for protective measures, right, in our portfolios. So next week, if you click on that from the university page that was up there, if you click, you'll see the Options Jumpstarter Beginner's Guide. We've got 3 sessions next week of this live free webinar. And we're going to talk about 4 important things, what important terms are, right? We get rid of a lot of the noise, right, for those who are new to options. When to place your trade, how to set up the trade, and a system. We believe that your portfolio can't really reach its full potential. Doesn't mean you can't be successful, but if you're not understanding some of the basic option trades to use leverage, among other things, then your portfolio, again, not that it can't be profitable, but it's not going to reach its full potential. So join me next week. If you go to that link, you can choose a day, I'll spend some time with you. Okay.
Just to let you know, the link is in the chat for you guys as well. You can click on that link.
Okay. All right, let's switch gears and we'll come back to my couple of stocks. The first thing before I talk about the two stocks that I have chosen, one is Devon Energy and the other one is GDX, which is an ETF, which is why relative value and safety are right at one there. David has typed in a couple of times. I happen to notice in the box here. You know, we started to comment on it, and one of the comments was about financials. And why aren't there any financials up here? And I was going to do one or two financial stocks, but quite honestly, I put it off here. Number one, because I wouldn't be buying stocks for that purpose, right? Right now, given what the market's doing. Yes, historically, as interest rates, if and when they begin to rise, financials generally take advantage of that. And there's no doubt about it. But it's the timing, I think, that why none of us here put a financial up here. I'm not going to speak for those guys, but I think that that's the case here. I do believe that there will be a time when financials certainly are in place. I could give my 2 cents on what I think what the Fed's going to do. Not that it's worth about a quarter of a penny, but I'll give you my 2 cents. Is that they will show some restraint, right? And I think they, as Powell said today, they will be very careful given the current situation, right? The macro look and the geopolitical look that we're looking at. So, you remember it wasn't long ago they were talking about 7 rate hikes this year. It's my opinion, not VectorVest opinion. It's my own take. We'll be lucky if we see 3, in my opinion. But that's down the road, and who knows what's going to happen. So just for anybody who's thinking about financials, generally, I love Bank of America. I love Schwab, JP Morgan, Morgan Stanley. These are all great companies that I could have easily picked to go out here. You could just go buy XLF, the ETF, when it's time. But that's just my take. And again, I'll speak for myself. That's why I didn't pick a financial, and I think these guys are on board with me, I think.
Amen to that, bro.
So just to clear that up, because I saw Dave a couple times type in on that. So what I'll do is I'll start with Devon Energy, one of my very favorite stocks. We've had it in our buy right portfolio and in the coaching group. I personally own it just for the sake of transparency. We've got, as Glenn went through, I won't define each and every one, but growth potential 1.72 on the relative value. Relative safety is okay. It's above 1. Relative timing, obviously very good. And then comfort index. What I love about the numbers here actually start to the right of the buy recommendation. That is the growth rate, the earnings growth rate on the stock, 45% per year. The earnings per share is there. The earnings yield, let me just bring this over here to see some more of this. It's easier if I do it this way. We're looking at a PE ratio of just 11.38 here. And here's what I really love, this dividend yield, 4.5% yield. So not only are you getting what you can consider a growth stock here, but you're also getting a really nice dividend payout on this particular stock. So forget PAM Energy and go to Devon. I'm just kidding.
Wow, did you really say that? Wow.
I'm joking. Anyway, wow. So this is what dividend safety is strong, dividend growth is strong. And so this is, listen, it's a great stock. So a little different than MRO. It is in the drilling portion and exploration. So a little different industry, same sector, I guess. And then the other that I did, going again to more of a current, if they begin to raise interest rates, I chose to do the GDX, which is the gold miner ETF that tracks, the gold miners. I was going to do GLD, which doesn't. It actually tracks the price of gold. So understand the difference there. GLD, although it would have been a great one to do as well, I'd be bullish on both of them. But GDX, and one of the reasons was I started to look, and first I was going to do Newmont Mining as my hot stock. Then I looked, and I like Barrick Gold. I've owned Barrick Gold, and I like that stock. And then I said, okay, hang on a second. I'm going to Google real quick and see what stocks make up the GDX. And wouldn't you know, those two stocks are the biggest holdings in GDX, right? So Newmont Mining, Barrick Gold, which is GOLD as the symbol on Barrick Gold. You can go into those, or you can go into GDX. So there, we don't, the fundamentals are always going to be one. These numbers are what we really look at is relative timing when we talk about those. So those are my picks. Those are the rationale behind my picks, very much as, as Glenn was talking about, and I think Steve is going to talk about. If we look at a graph, what's the easiest way to do that? If I just go here.
No, go back to it and just, you had them highlighted.
I did.
Unless you can go this way.
I'll just do this way. So I'll start with Devon Energy. I'll type that in, and what do we got here? We don't want a one-day look. I'll get the end of day. Well, we'll just start with a 3-month graph here. So what we have here is earnings per share. I'll make it a 1-year graph. Earnings per share, which is very strong. We see the volume. There's no, worries about volume. Is there going to be increased volume here and there? Sure there is. But we've got, a nice move to the upside. And, I don't look as closely. I'm not this is not an attempt to day trade Devon or very short-term trade it. I believe right now, given the market conditions, this is a stock I want to be long. So I'm not really looking for, is it trading a tick higher than yesterday's high before I buy it? Usually once I've made my decision on the overall view of the market and my confidence in the stock, unless I'm looking to day trade, that's a different story, but that's not what I'm talking about here. So you've got, a wonderful move in an industry that's continuing to rise. And as Steve said, I don't know when oil stops going up, but right now, I believe this is the place to go. And again, it does revert back to interest rates and the current economic realities that we're in right now. And so that's why I think you don't see any financials in here, as I said earlier. But hard to argue with this stock. The dividend payout is unbelievable. The stock price, forget before all the craziness has happened, right? Someone typed in earlier, I saw too, I'm not sure who typed it in, but commented on the only reason oil is up is because of what's going on in Russia. And while that's a great part of it, I personally don't believe that's the only reason, but I won't get into all that. But, the stock has been moving up for longer than this nightmare has been going on. So that's my first pick, Devon Energy. I don't know what you guys think about it.
I like a couple of things. One, your perspective is always going to be on the long-term play because you are the manager of retirement. So I always love having you on board from that perspective. Two, I love everybody's opinion, but it's amazing how everybody. Now, we'll just leave that. I like the answers that we give in regards to the comments that are made. All right. The things that we say and show are what you see. And just like what you said, what was your quote again about a graph?
It's not what you're looking at, it's what you see.
And that's the important thing. So I like the comments, I really do, but I like the answers that we give as well. Bottom left, top right over the last year, can't argue that. A lot of volatility, a lot of volume. The volume is conviction. And even when it fell off here, once it started going up again, look at the rising volume. And of course, the earnings per share, the engine that drives the stock's price higher. Coming off a new high, off of, yesterday's activity and above the moving average. So it's a beautiful looking graph. Steve?
Yeah, so one of my very favorite picks in the whole space there, Jim. It's right up there. Synovus would be a close second. Devon's actually my very favorite pick in the whole space from a capital appreciation and income side of things. I think there's some better pure income plays that are out there and maybe some better pure capital appreciation plays, but I think you get the best of all worlds here with the Devon Energy. I think it's a really great pick. I also like on the chart there with the 20 average, it's forming a good basis for entry, on that stock. And with the announcement of the release of strategic oil reserves, there could be some short-term softening in petroleum before, the reemergence of continued upside. So I'd be looking to maybe enter on the next kiss of that 20 average versus catching it right now at this very second. But I love the pick. I think it's tremendous. I really do.
Yeah, and just one quick thing about the energy sector and several of the oil companies or petroleum companies that we're talking about. You see, they're the top industries that are in here, and so just one other thing you can do, and I'll just pop this in here, much like I'm going to talk about in gold in a minute, like I just was talking about. Remember, there's always ETFs that you can trade. If you're worried about an individual stock and you want to go with the entire industry, maybe a little lower beta here, you're not going to get the huge moves, but buying calls on XLE went back when it was at 65, $67. It's at 73 now. Another great way to go back to the options idea, right? A lot of these we'll use call or put options on a lot of these, but just another way. If if you like the entire industry, which is doing well in the VectorVest rankings of industries, just another way to play it, which leads me to the GDX. If I bring that up, it's the same idea as I talked about. I'm looking at and it's not a hedge. A lot of folks will think or will use gold as a hedge. That's really not the idea here, but the gold miners is a great way to play this market. Again, if I'm looking at, this is a 1-year graph, I'm not really going by that. We start there to see how it's performed. I'm not going to go into the Huey Midas touch graph right now, but right now, gold has been working, whether it's GLD or GDX, or as I said, you can go to the look up the top holdings, Newmont Mining, Barrick Gold. If you're looking for individual stocks, that's really up to you. So the graph here isn't going to be a huge sale, other than it's it's above the moving average here. I guess this is support and resistance, so it's above that. Is there volatility? Well, remember, people, the VIX is still over 30, so everything we show here is going to show some volatility. And so, Drew, one last quick point before I go, because I keep seeing it here. Somebody keeps asking about the buy and sell recommendations. Would you ignore it or would you not? And, it's important I would never ignore the buy, sell, or hold rating on the stock. But remember, one of the reasons I don't have financials in here right now to play as rising in higher interest rates is because I wouldn't buy any of them now. And my guess is most of them aren't buy rated stocks at this point anyway. Right. But Devon Energy is. GDX is. In fact, all of our picks today are buy rated stocks, which is great. But, if I was doing this, just maybe hit a sell here, but if I was doing this a week ago, I would still like GDX, even if it was a hold. So that would not stop me. It's a good piece of information now, but it wouldn't stop me from purchasing either this or any other trade that I would do. That's my take.
I was getting ready to answer T and J Chili back as well. Thank you for doing that, Jim. Now, I'm of the mindset, and I said that to Jim before we started. I said, I'm not sure I'm on board with gold. Then I looked at the graph, and I see that the stock is above the 20-day exponential moving average, that the stock it's coming off a little bit of I guess you want to call that a swing high. You can call it that, right, Steve?
Yes.
Okay. It's approaching that level. Even though it's a red bar today, it's an open red bar, which means price is now higher than the open. It's still lower than yesterday's close, which makes it a red bar, but it's open. I like that. And there used to be
the perfect buying opportunity for both GLD and something like this is to buy it on a day like today. That's
you know what I like about doing that? Personally, I'd wait for it to take out that swing high. That's my opinion. All right, that's and that's why I love the difference in opinion. I want to make sure that I've got some confirmation that the stock's price is still moving higher since it stopped there. I'd like to see 12 cents higher than the high. Nonetheless, it's in an uptrend. It's above the 20-day. The volume is there. You're not going to see earnings per share on this, and it is a buy. I would like to see it break above that level of resistance before you go. But there used to be a direct correlation between the market going down and gold going up. That correlation went away back in 2007, 2008. But it's moving. I can't, let's, a bottom right here, a little level of support, and bouncing. Hit it 3 times. All right, that's good. Hit it 3 times, broke through 2 levels of resistance. I'd like to just see it take out that level of that swing high. Steve?
Yeah, so
And
a
I'm
couple
not
of things.
getting
First,
back at you because of that stock. I'm just giving you my 2 cents.
Yeah, sure.
a couple of things. Actually, I think you're both right. If you're an investor, more Jim speed, getting a little bit of a discount sometimes seems like the right thing to do. If you're more of a trader, like Glenn tends to be waiting till you break the swing high since you're already so close also. But on a shorter term perspective where you don't have as much time, for the trade to be as successful, right? So I think you're both right. How about that? The truth.
Jim is making
By the way,
faces.
I know,
I'm watching Jim's face because I can see
I'm
his
looking
face.
at my screen here and I'm laughing because if you guys had any idea the amount of trades I've done today alone.
Right,
Yeah, I
right.
hear you. I
The
hear
only,
you.
the only
No
other
idea.
thing I would like to throw out there, I think owning some gold always makes sense, actually. And so a certain portion of your portfolio allocated to gold, if anybody ever has a problem with that, it's probably, the wrong advice. The one thing that we haven't talked about, which I think is actually the stronger correlation, is the dollar, right? So ultimately, it's going to be a function of, does the dollar continue to strengthen or weaken? And then there too will be the outcome in terms of gold. So if the dollar, to play devil's advocate, if the United States remains the strongest currency, everybody's had tough times. I could see a case where gold doesn't perform as well as one might expect, but I almost see no outcome where gold doesn't perform at least fairly well. Um, and then I'll just leave it at that because that could turn into 30 minutes. Oh, I would also consider owning some Bitcoin at the same time. In Bitcoin, some folks are saying, pure volatility play. I'm not so sure that that's 100% the case because at the end of the day, gold is a derivative of a perceived asset as well. So we could go around that bush several times too. But I think owning a little bit of Bitcoin and a little bit of gold makes a lot of sense.
And to answer your question about Roy asked, how do you compare 2 stocks? I'm hoping that stocks against each other. The best way to do that in the VectorVest system is bring up the VSTs. That's our master indicator for ranking a stock, whether it's a $1 or $100 stock. I think it puts it on an even playing field. All right. So we're going to give away a mug. So before we get into Steve, thank you for your picks, Jim, by the way. Before we get into Steve, we're going to give away a mug like this one that I got in my hands. All right. And in order to get that mug, there we go. In order to get that mug, you got to type in the special keyword. The special keyword is interest. Interest. You type interest in the room, someone will win a VectorVest mug. We are giving away a VectorVest mug today. So you have to type interest into the room. And we'll give it away at the end. All right. What are Steve's picks? T&J, he's getting ready to put it in now. As a matter of fact, man, T&J is hot to get your pick, Steve. So, Steve, tell them a little bit about yourself. What do you do? And before you get into your stocks.
Okay, so glad to be with. I love the 2 guys I'm working with, first and foremost. I really do. 2 of my esteemed colleagues here, 2 that I really value their opinions, obviously, as well. So it's a good team you guys have today. But I've been with VectorVest now for 20 years. So I've been around the block, as it were. And I've really done just about everything education-wise here at VectorVest. Taught options, taught technical analysis, taught the VectorVest system. In some capacity, one way or another, over the years, taught literally thousands of seminars at this point around the globe. So it's been a heck of a good, a good ride. I've really enjoyed my time here, and I hope that comes across today when we get into my picks. So, do I have control here, guys?
Looks yes, like you do.
All right, let's go back to
the viewers
here.
Yep.
All right, and then we'll have my 3, and just to get them in the right order here, I think if things are still true, they're right at the top now. Okay, so these will be the 3 picks that I have for you here today. We're going to be looking at 3 different unique opportunities that I think parlay into the current economic environment that we continue to drive into. And I'll try to touch base on a little bit of kind of the overarching theme of why I would pick them, and then get into more of the brass tacks in terms of VectorVest analysis as to why that would push me over the edge. So we'll start from the top, and maybe the one that I wanted to go last, but we'll start with ARLP. So if we go back and remember some things that, say, Glenn said in this very same presentation that you're listening to right now, he said, well, he believes that our energy independence will one day come through the form of, alternative energy other than fossil fuels, electricity and such, right? EV vehicles and all this fun stuff. And that very well may be true. Seemingly it is true right now because that's the way the economic policy is stacked. Okay, so the one thing that's going to help drive the power grid, that's going to be able to substantiate that kind of activity on that kind of a scale, is, believe it or not, going to be coal. Coal is your largest producer of electric energy for the power grid. Okay, so what we have here with ARLP is kind of best of breed, but it's more than just a stock. It's also something called a MLP, or a master limited partnership. So for some of you guys that have an estate planner, this is a stock that you could run by them, and they'd be able to walk you through all of the nuances that we don't have time for necessarily today. But what it really amounts to in a nutshell, if you're long-term bullish on a particular segment of the market, in this case, say coal, what it would allow you to do is have a little bit of a tax shelter around the dividend income that's coming into you vis-a-vis that limited partnership. There's also some other nice advantages, and there's also some other nice disadvantages, or not so nice, shall we say. One of them being having to fill out your own taxes if that were the case. So I would want a tax guy and potentially an estate planner. So that may eliminate some of you. Otherwise, the schedule, was it K1, Jim? If I remember correctly?
Yeah.
It can be a little bit of a nightmare, your first time through it. So I just want full disclosure up front. But for some people in this room, this is one of the ones that they want to hear about, because it can really work well for you if you're a little bit more well established with your financial situation. Okay. Now, having said all of that, when we get to the brass tacks within VectorVest, it has a very, very nice relative value score that's largely driven by earnings and earnings growth. Okay, and so one nice attribute I see from really every single pick here is that it's got a favorable, very good to excellent, I would say, relative value score, which is a function of earnings and earnings growth. And if you're going to combat inflation, and you're going to combat in higher interest rates, you're going to need investment vehicles that have the earnings power to overcome those obstacles. The two enemies of earnings are the two things we just mentioned. They're inflation and interest rates. So my fear, actually, to go back and clean up what Glenn was saying earlier about my view, my fear is actually runaway inflation. My fear is that inflation is not transitory, and that the Fed will continually, as they often do, get put behind the curve and have to continually chase elevating interest rates at an unforeseen, pace in the future, because they will be forced to, because inflation remains persistent and remains rampant. Okay, and I think, in my view, that is the ultimate bad situation, because at some point, when interest rates continue to rise and inflation continues to boil over, at some point that tips every stock in the stock market underwater. So, because they can't keep up. Your earnings power becomes less than the sum of inflation and interest, and there's nothing to do but to begin to cut back on your own business. Okay, so all of that being said, I'm not looking at the chat and haven't been, but if people are still continuing to say, well, what does this have to do with higher interest rates and inflationary markets? Listen, on this screen right now, these are stocks that are well equipped, the best, some of the best certainly, to get that job done for you. And that's going to be through their earnings power. Eventually that will become the favorite stocks in the stock market, if they're not already, and I think we see that they are. All right, so enough of that. Glenn, you're right. It's never going to be 5 minutes with me. We'll try to keep it under an hour. Okay. But I've got so much I want to share and so much that I want, to give these folks that I think they deserve for taking time out of their busy schedules to be here. That's where it all comes from, guys. So if I'm sounding long in the tooth, some of these people need to hear what we're talking about. Okay. Now, the safety rating in the energy space is not going to be as high as some of the other segments of the market. These are actually really good scores for the space. Anything north of 1 right now on an energy stock is good. And the reason is energy was awful. It was the pits. It was the part of the market that you least wanted to be a part of for the 5 years coming into about the last 2. Okay. And so what that does is they're not safe because they weren't beating, and exceeding earnings expectations back then. They are beginning to do so again now. And again, at least my belief is I don't think that we're at the end of the party. Okay, so I expect these safety ratings to continue, and even the relative value scores to potentially continue to climb on a lot of these picks. Okay, when we get to the timing, everything's looking pretty good with all of our picks here as well. Everything's above 1, right? So let's just get to the chart. We'll take a look at this one first. Actually, before we do, it's easier to show here on the viewer kind of my last piece of information, which is, oops, thought I was going to get across there. All right, let's go back a little bit this way. There it is. Good. So the dividend yield here is 6.79%. And one of the things that I like, believe it or not, is that the safety rating is not 98 or 99 with this particular one. It's more in the line of 67. That's still a very good score out of 99. It's a very safe dividend. Why is it safe? Their earnings yield is currently $16.09. Okay, so that's more than 2 times the yield being paid by the dividend itself. So it's a very safe dividend. And honestly, I'm surprised the dividend safety isn't a bit higher. But that's probably due to some erratic growth here and there. Okay. Having said all of that, it's a good overall quality dividend, and then you could also have that tax sheltered vis-a-vis the MLP side of this particular investment. Now, if I right click and go to the graph, what we'll see as we get into this, hopefully, is a stock that's getting ready to potentially break through prior swing high resistance, and it's doing so on, you see this volume down there, guys? You see that volume continuing to spike higher and higher and higher? I think this is the earmarks of a stock that is, in fact, on its way to break out. And why is that? That's because there is going to be a push, and it's been made clear and reiterated last night that we're going to have a push driving towards clean energy. Now, isn't it interesting that good old-fashioned dirty energy is going to be what helps get us there? So I think that's why I'm picking the stock, for all these reasons. Technically on the chart, it looks like it's getting ready to break out. At this stage, if I'm a trader, I would go ahead and wait for the break through the prior swing high. It's likely to do hopefully tomorrow. Or if I'm going to take more of the master limited partnership view of things, which I think is probably the best view, and look for all those very nice dividend incomes in the future, I more go Jim's direction, and I'm thinking, why let it go up another $1 if I'm going to own this thing for a while anyway? So I'll leave it at that. You guys are free to chime in and free to have differing opinions, because at the end of the day, that's what they are, right?
All right. So I see a couple of chats talking about how coal is dirty, and Steve addressed that. If it makes the clean energy,
it creates it.
It is what it is. And I listen.
There aren't enough wind turbines that you can build to supplant coal as your main energy source.
Well, I mean, you got wind and you got solar, and so.
And I'm going to tell you, coal is still going to be your main provider of energy.
Well, I don't disagree. Arch Coal is another good stock in this space.
That's why it's moving.
Yeah, I agree. I do like the graph, bottom left, top right, a little bit more volatility in it, a little bit more pullbacks, but sitting in a channel from a technical standpoint above the moving average, approaching a level of a new 6-month high. Would like to see it break out above that, and I do like the rising volume. So it's moving up on rising volume. So there is some conviction behind the move. I like the play. All right. No matter where you stand on, energy, listen, what's the goal? Interest rates are rising. Does this stock have the opportunity to go up while interest rates are rising? Right? The answer to that question is yes. Jim?
Yeah, no, I roger all of that. It's along the same ideas that Steve's on, the same kind of narrative we've been talking about. The MLP stuff is, we used to talk a lot more about MLPs. I wouldn't worry about that. You've got a nice dividend. You've got capital appreciation potential here. Figure the rest of the stuff out after, but I think it goes right along with the narrative, and I like the pick.
You guys are being too nice to me. You could have come at me there a little bit, Jim.
No, I'm not. And I got a question, something that says France uses nuclear. You know what else is on the rise and none of us has talked about yet? Uranium. That's another thing that's on the rise. More people are looking at. There's a lot of
I think that's because
power plants getting built. Huh?
Nuclear is probably a big part of the future, but again,
I agree.
And is here now. I get that, but again, coal is your largest provider of electricity right now.
I agree. All right, Sanjeep Jha, are you here? If you are the winner of the mug. You need to send an email to connect@vectorvest.com to get your mug. So Sanjeep, are you here? If you're not here, I'm going to roll it again. Put it out there. All right, so if you're here, you won the mug, and if you don't respond in the next few minutes or so, there he is. He's there. All right, so Sandeep, you need to send an email to connect@vectorvest.com and give us your information so we can send the mug to you. Yeah, LEU, and go to CCJ, go to UEC.
See what I mean? So your uranium is not what's moving.
That's just one.
LEU is best of breed there. CCJ is the name everybody knows. Kimiko.
That's moving. As compared to and then we can disagree on that. I still think that there's a lot of countries in the midst of building nuclear power plants. So
my point is if you're going to pick between coal and uranium right now, this stock is essentially the same price it was a year ago.
I was addressing the France issue about nuclear. That's what that was about. That was what that was about.
All right.
Your next stock.
Charts don't lie, people do, right? We look at the facts.
That's why we go into the next stock, which we do the facts. We do the facts.
We look at the facts.
And we do. That's what we do here.
Buy gold, short the keys.
So the next pick would be Nucor. One of the bright spots I thought last night was the discussions on, strengthening our infrastructure. There's no doubt that infrastructure needs to certainly be improved. And so Nucor, I think, would be a very solid play here. Again, it's going to be I used the term earlier, best of breed. When I'm saying that, I mean in terms of VectorVest analysis. When we look at the RV and the RS scores here, for example, you're getting very well close to kind of the top shelf of the entire database, actually. Not, you stack it up against its peers, it's even further separation of being truly the best. But it's got terrific scores across the board, tremendous upside potential. Again, that's driven by tremendous earnings and earnings growth. But what this company does the best of any company on this list right now is continue to make money quarter after quarter after quarter, year after year after year. They've got the best track record by far. So this is a really, really good one to think about. Now, I put this one in here more from a capital appreciation side of things. I think there's potential for this company to really run. It is undervalued, just like ARLP was. When we come out here, you can see your dividend and your dividend yield are not nearly, well, the dividend paid is nice, $2. Boy, it's nice to get a $2 versus just say the one. However, how many shares do you own and so on and so forth. But so at the end of the day, it's looking at yields, right? And when we look at the yield here, it's okay. It's not great. It's not awful. Yields aren't now what they used to be. But in my mind, maybe they're playing things a little too safe, right? The dividend safety coming in at 98 there, a bunch of cheapskates. They could probably serve themselves well by offering up a little higher dividend in this case to attract even more investors. But they're so flush with money that I guess they don't care. So anyway, let's look at the chart. You might get Jim to buy it if they could get up to about a 4%
well, Steve, just
yield,
just
right,
real
Jim?
quick on the yield. Remember, as that yield may not look appealing, but remember why the yield is going lower. It's because the stock over time is moving
Going
up.
higher.
Inverse relationship. So
That's right.
that's a good thing sometimes.
That's true. That's a good point. That was a value add, as they say, Jim. That was a value add. Nice job.
I got to add
All right.
something. I don't know.
Yeah, that was a good one. All right, so looking at the chart here on Nucor has recently broken out. Earnings have been strong. Forecasted earnings. Everybody's probably noticing forecasted earnings beginning to taper a bit. There's your economic forces at play. Okay, there's your inflation and interest beginning to maybe sour up some of the forward expectations of these corporations and of the analysts that cover the stock, of which on a company like Nucor, you're talking about consensus analyst estimates of maybe a couple of thousand analysts. Okay, so anyway, these are the kind of companies that are going to do the best, and you can see they're even having a little bit of a tougher time these days. But breaking out here, and I like Nucor for the reasons mentioned. Very strong numbers across the board, and I think a big part of the infrastructure play on the back of Biden's State of the Union address last night. I'll leave it up to you guys to fill in the holes.
Let's do this. I like the space just in general. View the sector graph, the space. This, and Nucor, and Steve uses that word a lot, best of breed, because it is, I'm watching the space as an overall broke above a level of resistance, moving up higher. And just like he said about interest, stocks are going to be affected, but look at the earnings per share as compared to a year ago, way higher than it was a year ago. It's breaking up. I think that's going to, not in short order, it's going to probably take out the 1-year high. But it was a great stock pick, but I wanted to show you the whole space. The whole space is rocking and rolling nonetheless. So I don't think we do that enough. That's, regardless. I think that I'll put it back on the stock graph the way Steve had it. I don't think we do that enough to not only, and that's to go why Steve calls stocks best of breed. The sector is moving. This stock is a leader in the sector more so than a laggard. And that's where the terminology best of breed comes from. And he does a good job of finding best of breed stocks. Steve is very analytical. Jim is very retirement minded, and I'm just here. I'm just a guy. I'm the guy in the blue shirt. That's all I am. You're
Jim's, more than that, Glenn.
Nah, listen. It is all good. I love
definitely.
it. But
You've
that's why
stripes.
That's why I try to make the panels what they are and who they are on a monthly basis. I like what they both bring to the table. But I like the space. I like the stock, but I like the space, and that's where I'm going to leave it. Jim, you want to yell at me some more?
I was going to, but I let you finish. I had a few one-liners, but I'll hold on. Again, I do too. Steve and I were talking before we came on earlier. I had mentioned Alcoa. While it's not in the same industry and sector, it's the same narrative there.
STLD.
Alcoa AA. Alcoa. It's been a real good. It's one of in our buy right portfolio in our retirement coaching group. So yes, I do like the space as well. And when you look at the relative value and the relative safety at 1.4, and just it's a good quality company. So yeah, and the right time, right? It's all about the time. And when do you buy these? And I go back to the financial. I love J.P. Morgan and Bank of America, but I'm certainly would look at the stocks we're talking about right now prior to looking at, those others. So.
And I'm with you, Jim, is I think that they are going to, I've been saying that on live streams, they are going to be the benefactors of rising interest rates, but it is the timing. It is definitely the timing.
Yeah, the perfect timing was 4 days ago, right?
Actually, it was
We're
about
4 days late.
it was about a month and a half ago. Actually.
Oh, how about a year ago?
All right, Steve.
Not looking back.
Glenn, did somebody throw out STLD?
I did.
Yeah, STLD is close. Yeah, Steel Dynamics. I like an awful lot too. So we'll give them a value added pick.
Okay.
We'll go with
I brought that because in the steel space, I know you like Nucor. I like STLD. I've liked STLD.
And Timken is actually pretty good too. I mean, they're all good.
That was named after me.
Yeah, Timkins. Give me a second here. So anyway, I mean, this one's nicely undervalued as well. Look at the relative value and the relative safety. They're almost inseparable.
Yeah. They're pretty good. They're pretty close to each other.
A slight edge right now to Nucor overall.
Yep.
Yeah, I like both of them a lot. I really do. So good job there as well. And let's see,
that was a value add, Steve.
It was a value add, Glenn. Nice job. Nice job. Now we're going to go Exxon. I mean, this is an interesting day for Steve because I'm taking a very conservative approach. I think that's noteworthy. I normally have kind of a mixed bag. I normally have a very safe one, kind of a moderate pick, and then an aggressive pick. That's typically my MO for these stock pick, hot stock pick panels that we do. But I've gone fairly safe across the board here. I think that's a sign of the times too, probably worth noting. But you look at the numbers here; they all stack up again very, very nicely. Exxon's an interesting company. They're at least potentially the most passionate, at least out in the press, about trying to turn the corner and move with the policy as best as possible towards a cleaner direction. And so, with alternative, less dirty emissions and things of that nature here initially, all the way into the clean energy for then and beyond. So they seem like that would be attractive to some folks in terms of your mindset, things of that nature. They're also doing a lot of reduction in cost right now in terms of the business, and so they're kind of really sweetening the pot in two directions. Their earnings and earnings growth is going through the roof, and they're also eliminating a lot of liability all at the same time. So that's from some of the recent press releases you guys could find readily on Yahoo or wherever. So they're kind of a good story here as well. It sounds to me like this room needs a little bit of that for some reason. So I'll throw that out there. When we look at the earnings power here is tremendous. Let's go to the charts. We'll just kind of round out the day. I know it's been a long one already. No need to continue to belabor things that we've already discussed. I mean, they pay a good dividend. They pay a quality dividend. It's also safe, and it's a good yield. I think it's in the neighborhood of 4.5%. I don't see dividend yield over here. But anyway, let me go to about 6 months or so at least. So here again, it's a lot like the prior pick in that from a price structure standpoint, now is probably not the most ideal time to buy them, depending on your stance. I mean, if your stance is long-term, why worry about a dollar or two here or there? If your stance is more about the here and now, which is likely not a good way to subscribe to something like an ExxonMobil, I would wait for either a pullback to the 20 MA or a break of the prior swing high resistance, whichever happens first, because technically that's the correct time to trade it. If I'm going more along the lines of how do I cope with a higher interest rate environment for the months and potentially years to come, and potential high inflation and so on and so forth, this to me again seems like a very, very strong pick from that standpoint. So I'm not sure there's a bad time to buy it if we're going to collect those nice dividends and sell covered calls just to increase that income along the way. And we'll just go from there. You guys chime in.
All right. I like to pick. Can I use this, Joey? Here. I did. Can they see that? They are. Oh man, I like that. So Joey gave me that graphic. That's what I think about the petroleum space. That's straight up what I think about the petroleum space. Now, in regards to XOM right now, I'm with Steve. I don't know if I buy it right now. I see 2 big wicks on the top of the last 2 candles. Shows me a little bit of give back. I'd like to see a pullback to the 20-day. But I'm gonna go along with what Jim says, because Jim makes sense. If I'm not worried about this and I got the feeling that this is what I want longer term, go buy it now.
Yeah.
Go buy it now. And
it's the 4th day in a row that it's traded higher highs. Why I would buy it right.
Okay.
3 days ago.
Yeah, I would too.
So I wouldn't. This graph wouldn't stop me from buying the stock today, based on the overall narrative that Steve laid out perfectly.
Right. But I'm a little different. I'm a
Yes,
little.
you are.
Whatever. I'm a little different because I still want confirmation before I pull
I'm
the
with
trigger.
you, Glenn. I do both things as well, you know.
And that's why
I'm right there with you.
That's why I made this statement both ways. Jim's face is like, "Oh my God, Glenn, shut up." I can see that's what your face is saying, and we'll have a conversation about that later. Just you
I'll meet you
Hey,
in the
Glenn.
hallway, Glenn.
Just
Right
you
now,
me.
this price is middling right now.
Ooh, middling. Really?
I know.
It's middling.
Glenn hates that when I used to say that. Well, it's precisely halfway between the recent high and the low. That's no man's land.
Yeah,
It's
so
middling.
I like the confirmation before I pull the trigger, but that's why I made the statement, Jim, before you make those faces, because I can see your freaking faces. While you make those faces, I'm with him
I didn't
saying
say a
that
word.
I
I
would
didn't
be
say
okay
anything.
buying it now.
All I'm saying is I love it and I would buy it now.
Okay.
all
I
I'm
would
saying.
too.
All right. Well, fine.
I bought. By the way, just real quick,
Yeah.
I know it's going late. XLE. I talked about XLE earlier. You know what the 2 largest holdings in XLE are?
Chevron and
Mob-
no.
Chevron and
When
Exxon?
you say it, I'm gonna be so mad. Go ahead.
Chevron and Exxon?
Exxon and Chevron.
I just
Yeah,
said
yeah.
that.
Are the 2 highest, are the highest held, along with Devon Energy, although it's a much smaller position. So you want all 3 of those stocks? Go buy XLE. I was buying I'm just throwing this out here. I know it's getting late, but I was buying calls on XLE. Down here, it wasn't hitting new highs. It wasn't breaking through. But if you look at the narrative and the overall picture, right?
XLE's got the best chart.
Yeah, unless I'm day trading for nickels and dimes, man, buy it now.
And there you go. This is another way.
But XLE doesn't give you a 4.5 yield, does it?
I believe it pays a dividend. I forget exactly what. I can check on the other screen. Yeah.
Somebody just asked the question of how you can compare stocks. How about just right here, Con? I can put them on a graph together and look at them. You know
Actually,
something? If I did it this way, I'm taking XLE now quicker than I'm taking
XLE
XOM.
actually pays a $2.34 dividend, 3.19% yield.
It's
There
not
you go.
bad.
Yeah, it's not
It's
bad
not
at all.
bad.
Not bad.
It's a good
Alright.
pick, Jim. It's
All
a
All
good
right, so
pick.
Jim, do you want to chime in or did you already chime in?
No, I think it's a great pick. I was agreeing. I know we were joking, but I was agreeing along with this. And as I said earlier, it's the same idea behind Devon Energy, same idea behind some of the other oil petroleum stocks. And I just like to add that, like GDX, if you like gold miners, like XLE, if you like these petroleum companies, it's just another great way to play them.
And
Yeah.
I'm with Steve. I like
For those
CVE.
retirement-minded folks, it's
Yeah, that was retirement old people. I mean,
Hey, It wasn't a
Jim.
retirement trade buying 65 calls 2 weeks ago. That wasn't a retirement trade. That was.
All
well,
right.
it could be. It could be an early retirement.
I told Steve earlier I just bought a new set of Apex Callaway irons, and but thanks to XLE,
There you go.
I bought them.
That's how you do it.
All right. So one last thing before we go. Thank you guys, for being here. I appreciate that. Thank you for your insight. And Jim and I are going to have a long conversation later, which is going to be great. All right. Can I use this here? Yeah. All right. So I always say, and I've been saying this now, we're not sponsored by anyone. So we sponsor ourselves. All of this stuff, all of the insight that we've given is still just the tip of the iceberg, and I'm going to use that a lot, of what the VectorVest system has for you. 99 cents. And a lot of you are sitting here going, you know, if I come here on a weekly basis or a monthly basis, you guys give me all I need and that's it. Bull crap. You want to learn more about how to use this software? 99 cents. 99 cents for 30 days, folks. Take the trial. All right? Take the trial. Nobody sponsors us. We do this for the purposes of showing you some of the power behind the software. 99 cents. I say take it. And I think that it's important that I'm going to start talking more about it. That I'm going to start talking more about it because it's well worth it. You want to learn, Con asks the question about how to compare stocks. Look at VST on the stock. You want to know the difference between DVN and CVE. The analysis that we just did is the same analysis that you can do, Con, to help you define which one is better for you. And that's key. We're giving you stocks that we think that we like. There's a lot of other stocks out there, and I love that Jim talks about, well, this ETF XLE tracks several of the stocks that we talked about today. That might be the better way for you to invest. Maybe take the ETF rather than the individual stock. Steve talked about why these things are important as concerned to inflation and interest rates. So we put a lot of information out there. John says 99 cents. What can you get for 99 cents? A trial to the VectorVest system. That's what you can get for 99 cents. I'm going to push that because I got a lot of folks that sit here every week and they just say, okay, yeah. If you want to put a charge into what you can do in the market, 99 cents is a great way to go. And both of these guys gave a great value add. Jim in his old self doing the retirement stuff, Steve in his very opinionated self doing his stuff, and me
curmudgeon.
And I'm the one that's sitting in the middle trying to be the cool guy. Go ahead, Jim. What you gonna say? Flap your Jim.
I was just gonna say, for whoever's still here, you know, I talked about, you know, buying calls on XLE, and these are trades that I do. Join me next week for the options jumpstart.
All right, and we put the link in the room for you guys. Pick one of the days to go to it. I love what he has to offer. And it's free. That's the biggest thing. Not even 99 cents. It's free. I want to see how many of you go, oh man, it's free. I got to go. It's free. All right. With that, I'm signing off. Before I sign off, you guys can say goodbye in the way that you want to say goodbye.
Bye for now.
All right. That was pretty straightforward, Steve.
It was great to be here, guys. See you later.
All right. Adios, arrivederci, ciao, au revoir, sayonara, aloha to all my peeps in Hawaii.
Definitely not saying goodbye like that.
Hold on. Bom dia, salam, shalom, namaste. See ya.